Hi people, so Hari here. Welcome to my Twitter mentorship, and this mentorship will be in English and not in my regional language because I have done a lot of content in my regional language already and it is in my YouTube. You can go check it there. So, just for a difference, I chose to teach in English. And another important thing is I just want my content to reach universally. So that's what the main reason that I chose to speak in English. So yeah, let's jump into the content. So once again, welcome back to my mentorship. So here I am not going to discuss about any particular concept like ICT, CRT, support and resistance, MSNR, something. So I am not going to discuss anything in particular. So I'm going to discuss like a mixture of everything and what and all are really necessary and what and all helped me to take my payout. Okay, so that's what I'm going to teach you guys today. So some concepts maybe from ICT and some concepts maybe from CRT and some from other topics. Okay, so credits where it is due. I would like to give the credit to ICT and Dr. Romeo. So as I said, I won't be discussing any particular concept in this mentorship, and it will be wholly based on like price action. Okay, I mean the literal price action, how the price acts when it reaches a certain level, or how the price will act after it reaches a certain level. Okay, so the main topic, the first topic, okay, that's what we are going to discuss today is about finding the TOL, that is drawn liquidity. So guys, each and every word that I'm using here should be treated as a precious thing, okay? Not for my good, it's for your good. I'm not going to gain anything in this teaching. I'm just going to gain little bit of self-satisfaction for sharing my knowledge for free in this platform, okay? So it's you, the one who's going to gain by learning from the teachings, okay? So yeah. So guys, go grab a cup of coffee and then take your notebook and then pen and then sit. Until then you can pause this video, or it's your wish to fuck up in life. Okay? So consider this as the last option in your life, and this will be enough. Yeah, literally it will be enough to become profitable. And guys, I've decided to drop one mentorship video per week in my X. So kindly follow me in my X. Don't uh, don't just neglect. As I said, consider this as your life-changing opportunity. It will change your life if you follow it blindly. Yeah. So yeah, I just got carried away. Now let's come back into the concept that is draw on liquidity. Okay. So the term draw on liquidity means it is a liquidity pool, or it is a liquidity like internal range liquidity or an external range liquidity where price draws to. Okay, so we'll just see. So for example, this is the current structure. So there are two drawn liquidities. Okay, so see, price can either go and take this DOL like this highs, or then price can come and take this lows. Okay, so this is called as drawn liquidity. So it is the place where price actually draws to. Okay, so that is what drawn liquidity means. So in this drawn liquidity, you can trade two types. Okay, so for the first thing is you can trade when the price goes towards the drawn liquidity, or you can trade when the price comes after taking the drawn liquidity. So this is what the two types are. So in this we have another few types. So the price either goes from gaps to gaps. The price can either go from swings to swing, that is highs to lows or lows to highs, or it can go from gaps to highs and lows, or from lows and highs to gaps. So these and all are the different other types of price drawing. Okay, and sorry for missing out this information. I would like the people who are watching this video to have some pre-requirements, such as basics in ICT, basics in CRT, and then few basic concepts in price action also, like support and resistance, trend like liquidity, range liquidity, so like those. So if you don't have those basic knowledge, so you can't continue. Sorry for it. So it's your loss again. So if you are a pure beginner, just save this, just bookmark this video, and then go to your YouTube. Just learn few basic concepts from YouTube regarding to ICTs and CRT, and then just come back. You will have the source waiting for you. Okay. So yeah, because I can't discuss each and every small topics in detail in this mentorship. So I'll just focus on the important 8 to 9 topics in this mentorship. So in those discussions, I may use some words like, for example, I may use breaker block, I may use a rejection block, or I may use turtle soup. Okay, so I may use a high that took the low or a low that took the high. So these type of terms should be understandable by you people. If you don't understand, then it's purely just a waste of time. Okay, so that's why I need a pre-requirement from you people. You people should know the basics in ICT, and then the basics in CRT, and then the basics in price action concepts. Okay, so if you don't know, if you're a pure beginner, just bookmark this video and then go study the basics and then come back. Okay, I'll be waiting. Okay, so as I mentioned, there are 3 types. Within those 2 types, so gaps to gaps, gaps to swings, and then swings to gaps. Okay, so in that, I prefer you people to take one concept. Okay, I prefer you people to take one concept like gaps to gaps or gaps to swings or swings to gaps and master it. Okay, so just freaking master it. Don't try to catch all the moves literally, whether the price is moving from gaps to swings, or whether the price is moves from swings to gaps, or it is moving from swings to swings or gaps to gaps. Don't just confuse it. Okay, so yeah, so here what we are going to see is finding out the DOL or finding out the daily bias that is required. Okay, so from where to where the price will move, that's what we are going to see. So according to me, I use just a daily chart. I use actually weekly chart, and from weekly chart I'll come to daily chart, and this will help me align my bias. Okay, so the thing is, it is purely based on the candle closure. Okay, so this is the candle closure, and consider this as a bearish candle. Okay, because it is red in color, so consider this as a bearish candle. So we know that a candle's candle's open will be high, and then candle close will be low in a bearish candle, right? So from the close, just measure towards the low of the candle, and from the low close, measure towards the high of the candle. So now find the distance. Okay, this will be a mechanical way, but still it works. Okay, so this is how it works. Always see this, guys. Always note this down. Price moves to the liquidity that is very near. Okay, so it moves to the liquidity that is very near. If the price closes here, there is very high probable chance that the price will likely go here and not go there. Very rarely it will go there. Okay, so it depends on the days, it depends on the sessions. So those are all I'll be teaching in the upcoming sessions. So now just understand this. So a candle is there, so that candle's closure is near to the low or high is what you need. Okay, so from the close, if it is the low is near, the price will more likely to draw to the low of the candle. If the high is near, then it will be more likely that it will take down the previous candle's highs. Okay, so this is the important thing. This is the important thing in drawn liquidity. So you can see it here. Okay, so we'll just read from here and go, and then from weekly I'll teach you how to align it in daily, and then from daily the next steps will be in the next sessions. Okay, so you can see here. So, and guys, I just forgot to add this thing. So let this drawn liquidity be here, and I would like you people to choose a asset pair. Okay, an asset pair means, see Here I'll be trading mostly Euro USD and GBP USD with DXY, or sometimes AUD USD or NZD USD with DXY, and rarely I would be using BTC and Ethereum. And then gold and silver are my go-to options. So why to choose asset pair? An asset pair. So here I'll just teach you the asset and what an asset pair is. An asset pair is a group of assets, okay, group of assets that moves together. So it moves together means it will help you to find the correlation between each and every asset, and you can find it. Then you can figure it out like all the three assets will move together. So using that as a confirmation, you can take trades in the direction that it's about to move. So here an asset pair, I'll give you the various asset pairs: DXY with Euro USD and GBP USD. Okay, this is a widely traded asset pair. And the next asset pair is DXY with AUD and NZD. This is like secondary, not secondary actually. Then excuse me. So this is another widely traded an asset. It is an asset pair. So here BTC and Ethereum. Okay, so this is another. So choose either one and then just master that. Okay, in beginning stages, just choose either one and then master any one. So I'll be mostly trading these two, and I won't be trading this much, but still I'll use these AUD and NZD to correlate with Euro USD and then GBP USD. Okay, so just choose one asset pair in this. So as I told, I'll be mostly trading this, and then secondly I'll be trading this. I chose to trade this because it has more volatility and it has very keen alignment with the time. So you can take trades easily. Like execution in Euro USD and GBP USD is little bit easy compared to other assets. So that's why I choose this. And also another thing is this is totally based on economy of two countries, which will make it to consolidate, and it won't trend most of the times, and it will help us to take trades both the sides, in sell or buy both the sides, and it will have equal opportunities. But here it will trend in one side, which means sometimes you may not get a proper narrative to take trades. Okay, so that's why I recommend you people to use this asset pair. Okay, so let it be here. So now we'll start from here. As I said, near the closure, what is near? Like if the closure is here, you should find either the highs are near or the lows are near. Okay, so that's what you need to find. So here, from here we'll start. So here the candle closed here, that is this lows. Now you can measure 830 and then 195 pips. Okay, so here the highs are very very long in distance, but the lows are near. So this will be your DOL. So here in this case, this has failed. That's just because here the price moved from swings to gaps. Okay, so swings to gaps. So price moved from external range liquidity to the internal range liquidity. So that doesn't matter for us, because see, we are going to trade one concept and not every concept. So that's why when our concepts fail, other concepts may work. So that time you shouldn't change your strategy. So that's what separates profitable traders from other traders. Okay, that's what 1% does. They do the ordinary things when people fail to do it. Okay, they don't do extraordinary things. So here, see, this closure is here. So this week's DOL, that is 25th of November 2024's DOL, will be the lows, but still it managed to close up. So here the close is here, right? So the next week's DOL, initial DOL, will be this highs and then this highs. So after this you can find the closure 104.64, and see, along with this you should use the close of the previous candle. So what is the close of the previous candle? It is bearish close, right? So bearish close plus little bit comparatively less number of pips from the close is what the price will likely draw. But here in this case again, it didn't draw towards the highs, rather it draw towards the lows. And another reason here is because price is moving from gaps to swings. So here the third concept comes into play. So it works, but here our concepts fails. But see, just wait and watch, okay? So here, after price taking this lows, see, the close is here, the low is 45 pips, and then the high is 95 pips. But as I said, the close is here and the low is near, right? So low has been taken. So this is the range that you want to trade, okay? So this is the range. This 45.945, sorry, 45.3 pips is the range that you're going to trade. And then the next week, again, the low is near to the close and it is a down close candle. So it will be the DOL. And further, this was an inside bar candle, which doesn't matter to us. So our DOL is this low. Until price takes this low, will be bearish in bias, okay? And then next, see this low, because close is near to the low and this low has been taken, and again close is near to the low, so this low has been taken, and then here it is an up close candle, and then comparatively see 87.2, 90.3. So highs are nearer, so high will be the DOL and high is taken, okay? So here in this case, this close and this highs, this 87.2 pips is the range that we are going to trade, okay? And then the next candle, it is a very strong up close candle. It is an expansion candle, in fact. So here the three candle pattern has formed. So this is what they tell, like in CRT, they call it as three candle pattern. So here, once price takes this highs, we won't change our bias, we just become neutral. And then in fact, if you know this three candle pattern, we'll be trading this full range also. So from this range to this range, that is another 82.4 pips will be trading. So this is what I told, just choose one concept and trade it. So here another three candle pattern has formed. In fact, this is an inside bar. So here these four candles will be bearish. So this is what I've been informed. So either choose CRT's three candle pattern to find a bias, or then choose the previous candles highs and lows as your drawn liquidity, or choose from gaps to highs and lows, or highs and lows to gaps, this as your drawn liquidity. So these are the three important drawn liquidity concepts. So I prefer you people to take this previous candles highs and lows as drawn liquidity, so it will be very helpful, okay? So here again you can see price took the high, and you may ask, bro, this week just 29.3 pips will be my range. Yeah, obviously this will be your range for the, what this week is, January 2025, 27th January 2025 week. Yeah, then see down close, and then again price took this low will be your DOL, okay? And then later this close, I guess, or maybe this is a close, I think. Yeah, there is a gap, right? So this will be this is a close, I consider. So we'll just check it. If we go in daily, we can find it. Yeah, this is the Monday candle. See guys, Monday open is here. So as I said, some news event maybe in the overnight. So yeah, so this will be the close, and in fact the high is near to the close, so this will be our DOL. Yeah, and then again the high is near to the close, so this will be our DOL. Yeah, the DOL is taken. This is an inside bar. Whenever we keep a high or low of a candle as a DOL, and in between we get an inside bar, we doesn't care about it, okay? So this is the price took it, and see after price taking it reversed. Also this doesn't matter for us, and then the next candle low is very near, okay? So that will be our DOL, but price failed, okay? So on Monday we will be taking an SL, sorry. So here if we see, our win rate will be around 85%, okay? So just see with 100 candles you'll get it, okay? So again these highs will be our DOL. Yeah, highs taken. Again this highs will be our DOL, highs taken. These lows will be our DOL. In fact, in the first day, the lows has been taken. Yeah, in this time, this highs will be our DOL. Yeah, price took it. Now again, highs will be our DOL. Price took it. And then now highs again will be our DOL. Price took it, inside bar, and then price took it. And then, and then this lows will be our DOL. Price took it. So see, this is how we trade. Before we get a setup, the DOL is taken means we won't trade that range. We'll just wait. Okay. So now, oh sorry, why did I mark there? Because it is a down close candle and low is near to the close. And then again, this low is being taken. So gap down. So this week will be like weekly bias will be very neutral in this type of places. Now we have to really check it, guys. Close 965. Okay. So lows will be our DOL. Here we had got our bias wrong. So getting our bias wrong will be around just 10 to 15%. So if you have that 85% of the bias correctness, then you will be, it is more than enough to take profitable trades, guys. So this highs will be the DOL, and highs has been taken. And now again highs, because see 1362 722. This lows will be the DOL. Okay, we didn't get it. So here highs will be the DOL. Yeah, inside bar and highs has been taken. Whenever you get an inside bar, the next week you will have more opportunities, guys. That's purely based on my experience. So here the highs are the DOL, but highs are not taken, and then lows are DOL. So here we get our got our bias wrong. Again we got our bias wrong. Again we got our bias wrong. It's now very normal to get 2 to 3 days of bias wrong, but in overall long run we'll get our bias very correctly. So here the highs are very near, but it is a down close candle, so we have to look after it. Inside bar, another inside bar, another inside bar, another inside bar. Price took the highs. So here in this case also, the highs are near to the close, so DOL taken. Again the highs are nearer to the close, so again DOL taken. So again the highs are nearer, so here we'll get our bias wrong, and then in future we'll get in the next week we'll get our bias right, and overall bias is bullish. So this is how we find our bias. This can be applied in every candle above 1 hour. Okay, so even in 1 minute it works, but what is the use? You can just when you are in a trade you can just find it out. Okay, so this is how we align our bias. So when we come to the daily bias, same. So here I would like to verify the correctness of the bias of the month April. Okay, so from April to May there are around 1 2 3 4 5 6 7 8 9 10 11 12 13 sorry, 14 15 16 17 18 19 20 21 22. There are 22 trading days. Okay, so in this 22 trading days we'll see where and all we got our bias correct. Okay, so and also guys, it doesn't mean if you get your bias correct you may get your trade correct, but that alignment is there, right? So when you get your bias right, your execution should become right. So that's when you achieve the state of profitability. So that will be taught by me in this Twitter mentorship in the upcoming classes. So just freaking follow my Twitter page, and also follow me on Instagram if you want for the trade breakdowns, for the bias, and also you can join my Telegram. I have mentioned the link in my Twitter bio, so you can join there. And this all will help you to achieve the state of profitability by aligning the daily bias and your execution. Okay, so yeah, we'll see. So in this 22 trading days, so we'll just add it and keep it. Okay, so in this 22 trading days we'll see when and all we got our bias correct. So Wednesday April 1, the previous day was bullish up close, so we got 1 correct. So 1 correct, and then from here highs are 396, lows are 378. So low will be the DOL. 2 correct. So close, low is the DOL. 3 correct. Here see inside bar and then it took. Okay, 3 correct. So all the 3 are correct. So from here 31.4, 35.0. So here highs. So DOL correct. So here also highs, DOL correct. So here also the highs is the DOL, in fact correct. and then it is correct. It is correct. So it is correct. So guys, why I didn't cut my charts and why I'm doing like this in hindsight is you should know, right? You should know like this is how it will be. It will be. It. This is how the daily bias will be found. So for that reason only I didn't cut the charts. So I'm just showing in hindsight. So it's your duty. See, I am going to do for this whole month, and it's your duty to see it and find it for the other months, and then it's your duty to back test and then master this. Okay, so master this means whenever the price goes against you, you should have the enough confidence to hold the trade, and you should have enough confidence that your bias will be right, like 8 out of 10 times. So you should have that confidence. So for to gain that confidence, you are the one. It is in your hands. So you should do backtest, and you should master it. Okay, so highs are correct. So now the low is the DOL, and the low has been taken, and here the low is again the DOL, but here we had a gap down, so this candle we won't consider it. So we'll just mark it, and then the next candle high is the DOL. In fact, price took the high, and it is a Tuesday, so we'll do reversal. We'll use to take a reversal trade from this type of candles. Okay, so in future classes, in the upcoming sessions, you'll be understanding why we target Tuesday for reversals. Okay, so next low, so DOL is correct. DOL is correct, but here we got our SL1. Okay, DO, and then sorry 1, oh sorry 1, but next the DOL is correct, and wait, we'll see 35.6, 29.6. So DOL is low, correct. Here close 346, so high will be the DOL, so it is not correct. So 2, we have got our bias 2 wrong, and then here again DOL is correct. Okay, so price once it reaches our DOL, we won't trade. We won't look for the trade towards the DOL unless and until it is a Tuesday or Wednesday. So I'll teach you guys how to trade Tuesdays and Wednesdays in the upcoming sessions, and why I don't consider Tuesdays and Wednesdays like trades. Like why I will consider Tuesdays and Wednesdays trades even though it hits the DOL. Okay, so here we'll just check the win rate. So 1 we are avoiding, so we should check for 21 days. So in 21 days I got only 2 times my bias wrong. So 21 minus 2 is 19 divided by 21 into 100. What? I just got 90.47%. You can just go and check this in your calculator also. So because I don't think calculators will do mistake. So yeah, I have got my bias 90.5% almost of the times. So when I get 90% of my bias correct, in which I will be able to convert at least 70% of the times, at least I'll be able to convert 70% of the trades into targets. Okay, so into TPs. So you can understand on an average, if I get 3 hours per trade in 70 trades, 70 into 3, how much we'll get? 210 hours in 100 trades, and then 30% of the trades, let us consider it will go to SL. So it is 30. So it is 30, negative 30. Okay. So overall, I can find and I can come to a conclusion that I'll be in a profitable place with 180 R if I take 100 trades. Okay, it is not a normal number, guys. It is a huge number. So what I'm coming to say is, you just have to find the bias. You just have to find where the price is going, and once the price hits that place, you just should close your charts. Okay, so when you don't have a proper bias, then why do you even want to trade? So don't do that. Okay, so don't do that mistake. So I have here in April month around 90% of the candles right, 90% of the bias right. So in that 90%, as I said, I'll be able to convert at least 70% of the times. Like I'll be able to take at least 70 trades in that 90 trades. So in that 70 trades, I'll be like able to make around 180 R. So this is how bias works. So this is done with the data of 22 candles, 22 days in this current current mentorship lecture, but it's your duty to do it for around 100 days and then around 500 days and then for around 1000 days, and then just come out with a good win rate. So this bias method will obviously have a minimum of 80% win rate, and you can trust this. Okay, so this is how you will find the bias, and in the upcoming lectures I'll teach you how to align a bias, and then how to align a setup, and then how to trade, how to take a trade. Okay, so yeah guys, so that's all. So again, it is in your hands, and hopefully you didn't miss any of my word. If you have got a chance to miss it, then you have to just rewatch it. Okay, that's all. So that's all guys, so let's meet up in the next lecture, and I'll teach you how to profile yourself inside a daily candle that is moving towards your bias. Okay, ta-ta, bye-bye, take care guys, cheers, see you in the next lecture of my Twitter mentorship.